I was asked specifically about recycling, and this is something that I was due to cover, so let me just bring it forward slightly and save me covering it later, because I keep on using this word recycling, and some of you are curious about the significance of this, and I think it's an important issue. Now, before I talk about recycling, if you understand the phrase reclassification from equity, then it's the same thing. So when I talk about recycling, I am using a shorthand for a phrase which is known as reclassification from equity. Now, in order to talk about recycling, I have to take you back to the contents of other comprehensive income. Now, we have a curious situation internationally. We have a curious situation where we have a profit and loss account and we have other comprehensive income. And we don't have a clear set of principles as to what distinguishes when gains and losses are in P&L and when gains and losses are in OCI. We just have to follow the rules. Now, we try and put things in the P&L, but there are certain standards which occasionally put things in other comprehensive income. I can think of 5. Can you give me an example of a gain or loss that goes in other comprehensive income? Revaluation. So revaluation of PPE is one. Pensions. Pensions. Yeah? Pensions. So the remeasurement gain or loss on pensions is one, and fair value through OCI we've been doing is a third. So 3 examples there of things which go through other comprehensive income, and those are 3 fairly nice examples. So let's leave a space. Yeah, please leave a space. Leave a space. So when I think about other comprehensive income, I have got PPE, fair value through OCI, and pensions, remeasurement gains or losses on defined benefit pension schemes. Now these items are not recycled. Not recycled. And strictly speaking, when you are preparing a statement of other comprehensive income, you should make the disclosure as to whether the item can be recycled or not. And the examiner has confirmed in his marking guides that there will be a mark available for making that distinction. And there are 2 items which can be recycled. You should know one of them.
Dividends received?
No dividends received is investment income. That will be in the P&L itself. Yes, one of them is hedging, although we haven't done that yet. A group exchange difference is what I was thinking that you might know. So ISA 21. Yeah, ISA 21. Your group exchange difference, your gain or your loss, ISA 21, your group exchange difference, your gain or your loss, and as we are going to see later, IFRS 9, cash, flow, edge, gain or loss. So, I am taking this talk a little bit out of tomorrow, because tomorrow we will do a group profit and loss account, and tomorrow we will engage in the process of preparing a statement of other comprehensive income in the context of a question number 1. And we would then have to deal with these presentational issues, and this would then give us our total comprehensive income. So if I want to explain to you about recycling, I will make up a small, simple example in respect of International Accounting Standard 16 on PPE. So if we take IAS 16 and we say the cost is 10 and the fair value is 13, and there has been a gain of 1 each year, and it's now sold for 50. Right, I need to stop, I need to slow down, and I need to make my point very, very simply. IAS 16, like fair value through OCI, prohibits recycling. So we're looking here at an example of what recycling is. And I still haven't really explained what recycling is, but I'm saying here we are not recycling. We have an item which costs 10. Then the fair value was 11. Then the fair value was 12. Then the fair value was 13. So for year after year after year, the asset went up by 1, by 1, by 1. And then when it was 13, we sell it for 15. And selling it for 15 will give us a profit. So, first things first, how much is the profit on disposal? Good. The profit on disposal is 2 because we are not recycling. We have recognised the gain of 1 in other comprehensive income. The gain of 1 in other comprehensive income. The gain of 1 in other comprehensive income. And now, when we come to sell, we do not recycle. So the balance of 3 that is sitting in other components of equity is not taken back to the P&L, so the profit on the disposal is only 2. The profit on the disposal is only 2. So on disposal, we have here proceeds 15, carrying value 13, and therefore we have profit 2. So the proceeds are 15, the carrying value is 13, and the profit is 2. There is no recycling. The balance on other components of equity, is moved to retained earnings. The balance on other components of equity is cleared out. The balance on other components of equity is moved to retained earnings. So there is no recycling. Gains are only recognised once. I'm going to repeat everything that I have already just said. Even if you understand it, I'm still going to repeat it. Once upon a time, I bought an asset which cost me 10. After 1 year, I revalued it to 11. This gave me a gain in other comprehensive income of 1, and therefore gave me a balance on other components of equity of 1. Then I revalued the asset to 12. When I revalued the asset to 12, that gave me a gain that year in other comprehensive income of 1, and meant that my cumulative balance on the reserve was 2. And then in the third year, I revalued the asset to 13. And when I revalued the asset to 13, I had a gain in other comprehensive income of 1. And my other components of equity accumulated a gain of 3. So your reserve is cumulative. Your reserve is cumulative. I now sell this asset. So the carrying value of the asset is nil, because it's being sold. And I have a profit on disposal of 2. And that balance there is nil. No recycling. No recycling. This is correct because there is no recycling. This is correct because there is no recycling. Gains are only being recognized once. So I recognize the gain here, I recognize the gain here, I recognize the gain here, and then I recognize on disposal a gain of 2. So therefore, 1, 1, 1, and 2 make 5, which makes sense because I bought it for 10, sold it for 15, of course I've made a profit of 5. If I reclassify from equity, the profit would not be 2. If I reclassify from equity, what's the balance in equity? What's the balance in equity? 3. So if I reclassify from equity to P&L, the profit on disposal would be 5, and that would be double counting. If you recycle a bottle, you use it a second time. If you recycle a profit, you use it a second time. So if we were to recycle, then we would have 1, 1, 1, 5. And then the total there would be 7, which is a little bit kind of weird, because you buy it for 10, sell it for 15, but overall you've reported gains of 7. So that would be recycling. If we recycle, the disposal proceeds, the proceeds on disposal would be 15, the carrying value would be 13, but then you would bring in you would reclassify from equity, the balance of 3, and therefore you would make a profit of 5. You would make a profit of 5. And on recycling, you would still be debiting your other components of equity to clear it out, but where would you be crediting? You would be crediting your profit and loss account by 3. So if you recycle, you reclassify the balance in your equity and put it back through the P&L. And this is why it's sometimes called double counting. Recycling. Double counting. Now we are operating in a very rules-based and inconsistent approach. It's a very rules-based and inconsistent area of financial reporting. And it is one that every class asks me about. Because it's not straightforward as to when you put a gain in P&L and when you put a gain in other comprehensive income. You're following a rule. If it's an investment property, P&L. But if it's an operating asset, PPE, goes in reserve, goes in OCI. So they're both property, but one goes in P&L, one goes in other. Foreign exchange differences, individual company P&L, group stage other. Inconsistent, rules-based. There isn't a set of principles. The framework is strangely silent on these areas. Let me allow silence to descend for a minute or two as we listen to the air conditioning. Is there any comment there or clarification there? Have I helped? Yeah, I hope I have. On one level, I think this is quite important. Yeah, I mean there is a possibility we get a P&L in question number 1, and if we do get a P&L in question number 1, it will have an OCI attached to it. You have to know what goes in. Yeah, and these are things which can go in. I mean, I guess there is another one we just looked at, which is the, fair value through P&L change down due to credit risk. That's also another item in there which is not recycled, but I think there is a limit somewhere.